Hello guys, I'm back with the podcast. ACY Cast is back after I went to Gold Coast and I came back to Sydney. How good is to be home? How good is to be on your side, Peter? Yeah. And today we have Peter Pan back in the show. How are you, Peter?
Good.
Pleasure to have you back here. Today we're going to talk, Peter has a lot of insightful talk that we want to do. So we're going to talk about the Fed, we're going to talk about the ECB, the European Central Bank, and so on. So stay tuned, give us a like already, and introducing a few questions. Peter doesn't know the questions though, so it's going to be pretty interesting. It's not trading questions, it would be something more relaxed, so then you guys can have a bit of a laugh and not only like fundamentals, Forex, market. And you can know a little bit more about Peter as well, and how his life has been. Hopefully good. So yeah, Peter, so next week, we're going to have, as well, we changed the scenario. So you like it?
Yeah, cool.
Okay.
Very good.
Like it. All right, good.
Casual behind the desk.
Yeah, so we're just trying to figure out a best way. So put in the comments if you prefer last one. That was like we sitting here with plants in the back. We still have the plants. They're fake though, but they're cool. So yeah, shoot up in the comment, guys. Anyway, so let's get back to it. So yeah, Peter, next week, we're gonna have Fed and ECB, and you mentioned as well we're gonna have the CPI for Australia, right?
Yeah, Australia.
It's been pretty hurt, to be honest. I think it's going down actually, the CPI.
I mean the inflation in Australia or in the United States?
No, in Australia.
In Australia?
Yeah.
Actually, in Australia, I think it's, we can say it maybe gets its top, but if you are talking about the inflation is keep going down, I'm not very happy to say that.
Really?
Yeah,
Wow.
it's just had come back from 6.3 to 5.6.
Yep.
So it's a good news, but it's not a very optimistic news.
Well, last month we had, I don't know if you guys read the minutes and the monetary policy statements from the central banks. It's really, really insightful documents for you to have a look at it. But we had Australia, the RBA, saying that for them, last month was, they wrote it in the statement, that was the top of the CPI, and now they're expecting inflation to come down further.
Yeah.
So I sort of agree with them, but at the same time they state very clearly that the main problem right now is that it's hurting the population, because all the rates that they have been raising since last year, it's interfering directly into prices right now, and especially into rental prices.
Yeah.
So we can, I was paying like $580 for 2 bedrooms apartment. Now it's nearly $780.
Yes.
So we had a massive jump.
Yes. That's not the only problem. Yes, the rent is going very high. It consists of a large part of the inflation. But the other thing is that the salary wage growth is climbing high very fast. It has climbed to, I think, 3.6 or 3.5%. It's keep climbing. So it's also bad news for the inflation in Australia, especially when we check the previous RBA interest rate decision.
Yes.
They say that they will be hiking the rate more slower than other countries, other Western countries, because they think they don't have the wage problem. But now the wage problem is getting big.
Yeah.
So it's also bad news. The rent is a bad news, salary is a bad news. And also we are reading that the commodity price has get its bottom and goes up a little bit. We can see the oil price goes up. We can also know that the Australia electricity price has been raised starting from this month. And also the lowest salary the level has been raised by the government. So all of those, maybe someone here it was a good thing, but for inflation it's a bad thing. So the interest rate may not be like many people think it will like goes down next in the like first season of next year. I'm not quite happy to see that. I think the interest rate, even though maybe it will only hike one times or two times, it will keep that high for entire 1 or 2 years.
So
that's my thought.
Okay, so now I can sort of understand why you're more bullish on Australian dollar, isn't it? Yeah. You're more bullish, right?
But bullish in the long term.
In the long term,
not in short term, not in like this month. As last podcast said,
yes.
I think the USD is going up. So that's the reason why I think the Australian dollar will have a lot of pressure there for the other 4 or 5 weeks.
Okay.
Yeah,
and you know, like, I mean, what's the big take on the US dollar that we had like a huge sort of
you mean crash on the
we had
first
a crash.
two?
We had a crash. What's happening? Because all of euro dollar shoot up. I was already waiting. Like, if you guys look at this beautiful face here, and this one as well, like, sorry for that again. But anyways, so if you guys, you know, been following us, let's say 2 to 3 months already, especially into the ACY YouTube channel, you could note that I was pretty bullish on euro, and everyone was sort of like, oh, it's not gonna happen, it's not gonna happen. I was like, yes, it will happen, and it's happening right now. So on your take, what is happening on US dollar? Why is this so weak?
Yeah, when we checked when the US dollar has been crashing from I think the start week of the of this month, so we can see the CPI data, the PPI data of United States is very low.
Yes.
CPI is only 3%, which the previous month is 4%, and the PPI is also dropped to 0.1%. It's a lot. Lower, not a lot lower than expectation, but a lot lower than previous numbers.
One,
So I think that's the reason why people are shorting US dollar and buying all of those assets. Yes. Also, Australian dollar goes up, Euro dollar goes up, the gold goes up, the oil goes up. Everything is going up because of the USD.
And as well, you know, we had a bit of last week. I think was last week. I even came to a YouTube channel and talked to you guys about the JPY being a bit strength.
Yes.
And you know, it's funny enough because a month and a half ago, 2 months maximum, it was the weakest currency.
Yeah.
No one would be willing to buy JP Morgan, JPY, Japanese yen. And now everyone is willing to put money there. You know?
Yes, but I won't put any money in it now. Maybe after next week, because next week the Japanese central banks will also release some policy, but I don't think they will change anything. So I won't buy JPY anymore.
Yeah, a lot of banks are expecting actually, and I think it's going to be a huge opportunity.
Yes.
If they actually change, sorry to cut you on this one, but if they actually change the monetary policy, it's going to be huge impact on the market. Huge impact.
Yes. And the reason why I don't want to buy Japanese yen is that when you see Japanese yen getting strong, you can also see the 10 years Japanese yen bond yield goes up. But it has a limitation because the YCC from BOJ limits the yield limits is 0.1%. And when the Japanese yuan getting strong, it has keep going up and reach to the top. So I think there may be some space for Japanese yen to still goes up, but the space is limited.
Is limited on the short term.
Yeah, on the short term.
And then
but if they change YCC, yes, of course, it will be a big rise.
I don't think they will, to be honest, especially next week.
Yes, next week, I don't think so. The governor in BOJ said it will be on September or October, yeah. I'm looking forward to it. Especially we have seen the inflation in Japan. It has just risen to 3.3% for the core inflation. It doesn't rise a lot in recent months, so it's a good news for them.
Good news, yeah. Well, anyway, so I'm keeping saying, and as well, you know, I don't know if you have watched with Dan the last podcast. Dan is waiting for the same opportunity as well for the switch on the BOJ, the BOG. And I think all the traders should be waiting for that. I think it's going to be a nice opportunity. Anyways, so let's talk about ECB first.
Okay.
What a little tricky boy they are. Because, you know, they come and say, yes, we're going to be raising interest rates, you know.
Yeah.
Personally, I think they will do another 25 basis point next week. I think everyone is waiting for another 25. But the market, it's already priced in. Yeah. But what's happening, and you know, until the end of the year, it's a no man's land, because they made very clear they won't cut rates this year. They won't cut rates. A bit of, most of the emerging markets right now, they are cutting rates. Brazil, I know that it will cut rates as well as an emerging market, you know, but ECB is not willing to cut rates. They are willing to pause if needed.
Yeah.
Do you think they will pause, or do you think they will continue hiking without any problem?
It's very hard to give a complete conclusion there.
Yes.
But for my own personal opinion, they will just hike 25 basis points and will keep that interest rate high for a bit longer time, because the inflation in UK and inflation in Europe doesn't seem quite stable, goes down. It's just like the Australia. Yes, it can see a top there, but you can't say that it has already getting a downside trend. Especially when we say downside trend, we can see Canada. It has keep dropping and dropping to 2.8%. It's a good thing, but Canada is still hiking the rate.
Yep.
So I don't think ECB is quite clear what the inflation will go, but they will keep like pause, add
exactly.
And keeping doing that.
Yeah, exactly. That's exactly what I think, because even they don't know what.
Yeah, and all of those central banks is the Western central banks. They all didn't. No one is saying they will cut the interest rate this year. No one said, but the market expected.
Yeah.
But the market expectation is always changing.
It's always changing.
Yeah. So the central bank's opinion of those Western countries is stable, not cutting interest rate this year, and I agree with that.
Okay.
Yeah.
Yeah. Well, I do agree this as well. And you know, for those who don't know how to trade an interest rate, actually, would you trade an interest rate news like, oh, they raised that much, okay, I'm going to trade now, or you would wait for a day or two and then you would trade something?
That's a trading strategy we are focusing right now, related to the interest rate decision. But for me personally, I want to trade when the interest rate decision comes out. I just like Australia, like RBA. When the RBA decision comes out, the market doesn't just fluctuating a lot.
Yeah.
The market is decided by the inflation, because the people in the market does not believe the central bank. So the central bank said they won't cut the rate, but they expected they will cut the rate. So they don't believe that. What they believe is the inflation rate. So we can see some big trend, some big opportunity, all starting from the data, not the decision rate. Especially the US dollar drop, right, from this month's start. Why? Is that Central Reserve Bank said anything? No, right? It's just CPI, it's just PPI. All of those markets is based on data. So data is everything, not the decision.
Yeah, that's the point I always I always put my finger in. It's the data that matters. Yeah. It's always there. All the numbers are there, and people close their eyes to don't see it. You know, nothing against it, but like, it's not a line on your chart that will show you the data. It's not that data I'm meaning like CPI, I'm meaning PPIs, I'm meaning non-farmer payrolls, all of those things.
Yes, but another thing is that people believe in data, but sometimes the central bank will do just completely out of your expectations. Yes. That will also be some trading opportunity there. So both of them, the data is one thing, the out of expectation central bank's move is another thing. Both can be traded in the market right now.
Which one do you prefer? When you get surprised, or when you know what's sort of happening?
I think both. I have a more complicated fundamental analysis there.
Okay.
Like the U.S. Federal Reserve, I think they will keep hiking for 1 or 2 because the inflation rate will automatically rise to 5% in the next half year. So, but that's my own opinion. So that's the reason why I think the USD is oversold.
Oversold.
And I'm keep buying recently. Yeah, but that's my personal opinion.
Okay,
yeah.
so just a personal take here, guys, please don't. So you would be looking to short euro-dollar.
Now I don't want to short euro-dollar. I want to short GBP dollar.
Oh yeah, I'm sure. I have a short position there.
Because if you want to short GBP or euro, you need something to trigger it.
To trigger. Yeah, because it's too.
So this week there is a trigger for GBP is the inflation rate is lower than expectation. That's the reason why GBP goes down, and which supports USD to goes up.
Yes.
But for euro, the inflation rate does not change much with the expectation. So we haven't experienced the trigger yet, but I think there should be a trigger. The reason I think
for euro-dollar
to goes down.
Okay.
Yeah.
Even more.
Yeah.
Okay.
Even more. The reason behind that is my fundamental thinking there, because the 10 years bond yield difference between the euro and the USD does not rise as euro-dollar goes. So there is a quite difference there. The gap should be close. So how to close? The one thing is the bond yield goes up. The other thing is euro-dollar goes down. I prefer the US dollar goes down. Yeah. Yes, that's my point.
Yeah, I see your view. Yeah, guys, no personal advice again. All right, we are 17 minutes into the podcast already. I have, you can't see the questions. Pick a number, 1, 2, or 3.
4.
No.
I think you get 4.
No, only 3. 3? Okay. What does your morning routine look like?
Oh, morning routine is quite busy. In the morning when I wake up, I will open Bloomberg TV and just plug in my earphone.
Already there.
Yes.
Wake up
and washing face, brushing teeth, make my hair.
Jesus.
and goes out and travel to the
work.
company to work. And starting from 9 o'clock, I will read news, not only the TV. I will reading the news, all of those, like spending 1 hour or 2, or read through all of those. Especially every day, because for safety, we want to know what short-term trend is there. So we always need to know when the event happened, what is the influence for the price, exactly the time. So you need to make the time match. So that's also a big job to do. So that's the routine, to read news, to check the price, and to match the price and the news. Yes, that's the thing. And then I will write articles, like one morning report, one daily report. It has a different emphasis. One emphasis on yesterday and today, and one is emphasizing on 1 week or 1 month.
I do the same, exactly the same. My morning routine is sort of different actually. I don't wake up with Bloomberg already. I wake up like around 6:37.
Wow.
Yeah. Because I live a bit, it's far from the office, but it's still close in a sense. But what I like to do is, I can't get off from home without having a good coffee with bread, cake, whatever is good, and reading the news. Actually, with my phone, like seeing the economic calendar, to see the time matching decisions we can do, and reading like all the economic all the economic news, what's happening around the world, or if something happening in like Onso was sleeping, and then I get, changed. I don't get in pajamas to the office, and then I go and take the train and come here. And then I do the same thing. Like I wrote my my morning report talking about yesterday when I wasn't on the office, like a London session in New York session. and for the day.
Yeah.
That's pretty much it.
I think the difference between normal person and the analyst is that when we first open our eyes, the first thought is
It's already what's happening.
What's happening? I want to what happened. Well, I want to know whether my analysis is okay or not, because many big trading opportunities happened at night in the US session.
Yeah.
So always.
Exactly. I have a funny story. I was in a party once, you know, with a friends. I don't usually go to parties. You know, people think that trading is like, oh, lots of parties, alcohol, and things I can't say here, you know, and so on. But it's actually pretty different. It's like you're always on your phone looking to something. If something is happening, you have a trader, like a real friend trading, messaging you like, oh, what's the portfolio? What's happening? Oh, this is happening. Okay, what's the next position? Blah, blah. So you're always discussing with someone. And I caught my, you know, like everyone was partying, like surrounding me. And I was like that. Oh my God, so did it just happen? How can I make money from that? You know, and I was making money on the party. It was like everyone was partying, wasting money. I was making money. That's basically like a analyst life, I think.
Yes.
It's pretty different
sometimes
life.
I think for other people, it may seem a little bit boring.
Yeah, but it's so cool.
But, but it's quite interesting.
Yeah.
Sometimes you are thinking that you are understanding the world. Right?
Exactly.
Yeah.
That's something that my mentor told me.
Yeah.
He was like, I'm not gonna teach you how to trade.
Yeah.
He told me that I'm not gonna teach you how to trade. I'm gonna teach you how to read the word. And this is basically what we do.
Yes,
you
that's
know?
our final job.
Final job
Yes.
is to read what's happening in the word and put this together to trade.
Yes.
You know, so there's so much more, you know. Technicals are the only last thing. You know, I'm again on here. Technicals are the only last thing. Before that, you have so much things to do.
Yes.
You have like a lot of homework. Yeah. And you know what's funny? I know like people rely on those little things here a lot nowadays, right? Especially when you're working with technology, especially when you're working around markets. You need to have one of those so you don't get lost, you know, into what's happening. Yeah. And I went to a farm once, and I've been there like for 3 days. I think it was Thursday, Friday, Saturday and Sunday, I think, something like that. And it was without area, it was without like internet, nothing. I was lost once I came back. I was like, oh my God, what just happened in every log? Those days I wasn't here, you know, and then I have to go back and read all the bank researches, everything. That was like a painful day because I think I wrote like 50, 60 reports in those three hours. It was a lot of things to do. Anyways, so now just concluding the ECB. So my take is that yes, they will continue to raise another 25 basis points. There's no reason why they wouldn't do that. Yes. If they don't do that, then it's a big surprise. Yes. It's gonna be, I think, short. The trigger of the euro-dollar short. Maybe. Yeah. That's the point. And you have the same take. Yes. Okay, cool. That's it. All right, second one now, the Fed. You know, that's a little bit more tricky.
The Fed, like 99.2% of people think they will hike 25 basis points next week, and that's it. But there is some changes in this week. Yeah. So more and more people think they will keep that rate until year end, and some part of it, like I think there will be 23.6% of the people, traders think it will hike one more. So people opinion is divided. I do agree with another 25 basis point after next week. Okay. I think
so. Two more.
Yes, two more.
One next week.
Yeah, one next week. One maybe in November.
November. Yeah.
Yes. Yeah, that's my thought, because my opinion to the inflation is that if the price is keeping that speed, the inflation will automatically go back to 5%.
Got it. Okay.
Because last year,
Yep.
second half year, the price just go sideways. Go sideways because the the oil price
Yep.
is dropping quite fast.
Yeah.
But now we are seeing oil prices getting up, and considering the second half year, there will be some numbers effect there. So it will automatically goes back to 5%, but it's a very aggressive thing. I think it will be 4 to 5%. So for the Federal Reserve, yes, I think they will hike another 25 basis points.
Okay, yeah, I sort of agree with you in a sense of another 25 next week.
Yeah.
But then I think they will pause.
Yeah, pause.
Yeah.
But how long will they keep the high interest rate? No, I also don't know.
I don't know. And they made really clear they will do whatever it takes.
Yes.
Every central bank is saying this, like they will do whatever it takes.
Yeah.
But inflation is okay. It's still high, still high.
Yeah.
But it's pretty close to true.
Yes. You mean the CPI, right?
The CPI, yes.
CPI,
sorry.
yes. The last one is 3%.
Yeah.
But that's the reason behind that is that last year at June, the price is going up too fast.
Too fast.
Yes, because
it
of
was huge.
the oil price.
Yes,
oil price at that time has getting its top. That's the reason why it's year-to-year rate. So its current price compared to last year price is 3%. Yes, there is a tricky numbers in there. But if the let's say CPI index are keeping rising from now is 309 to the year end maybe getting to 312, and the year-to-year rate, because the price last year is very low in the second half year, so it will goes up to 5%. So it's a number game if we consider just the year-to-year year one. But if we consider month to month, the inflation rate is keeping from 0.1 to 0.3, and this month it released a 0.2%. So it's not. I don't think it's very happy to say we have already controlled the inflation.
No, I wouldn't say that.
Yeah.
There's a lot of job to be done.
So,
and with inflation comes a lot of things. Not only the number. People need to see what's actually happening around that number. Behind that number.
Especially when the market think it's very good market, bull market, they will buy stock. They will expand their business. They will buy property, which property prices already goes up. So that's also not a good news for inflation control. Inflation control, the heart of inflation control is there is greedy in people's heart. Yeah,
it's pretty hard actually.
That's the hard one. Not like the current inflation is controlled. No, you need to see through the greedy inside the consumer, the cooperator. What they think about the future and what they think will influence the inflation.
I actually, it's funny that you say like people think that's now it's time to buying stocks, right?
They are starting to buy the stock market just was not quite much, especially in this week. Right?
So I've seen my friend posted on Instagram. Jim Cramer. I don't know how to say that guy name. Jim Cramer. He say like, be careful. We are finally overbought. So it's time to keep selling.
Wow. It's super overbought, you should know. It's completely super overbought. Sell the shit.
Sell everything. Just sell your house, put it there.
Because my personal portfolio, I hold a lot of Nasdaq. I'm keep shorting CFDs of Nasdaq. Because I want to hedge the risk. I think it's a huge risk there. Especially next week, the Nasdaq will doing a special rebalancing.
Rebalancing,
And those big financial institution is prohibit to buy more big tech stocks.
It's crazy.
So I don't think it's a good thing. When, especially when we see last night. Sorry, the night before last night.
Which one?
The Tesla and Netflix,
Okay.
also Taiwan Semiconductor, they all released their seasonal financial report. Good report, not for Taiwan Semiconductor, but for the other two, good report, bad stock. The stock price just crashed 9% or 10% just one night yesterday.
Oh, wow. I don't actually, I'm going to be honest with you guys. I don't follow stocks actually. I'm more into Forex. I don't know. I've never had someone that told me about stocks actually. I've never had someone that was like, oh, this is the stocks. This is how it works. I know that it's a more micro analysis, not macro economics. It's more like a microeconomic sort of thing. Because it's more a company, right? So you're looking what's happening on the country, what the company are doing with another countries and so on. It's
actually, it's not. It's
is it?
In long term, yes.
Okay.
In long term,
I don't know. You tell me.
It's perfectly good, but in short to medium term, it's still based on the macro economy.
Okay.
So when we say something about the tech company, we can see the rise and drop is mainly be very closely to the bond yield and also
so they're correlated as well.
Yeah, much correlated.
Wow.
But the correlation has been closed from this year, from March, because of AI.
Okay.
Yes. So when we say correlation right now, we are talking about Dow Jones, not SP 500 or Nasdaq, because this SP 500 Nasdaq is based on AI. They just.
That was the rally basically.
But the Dow Jones, it is going with the inflation rate expectation in the future.
I was actually seeing. Talking, dipping a little bit on AI and all of the technology things. Yeah. Man, it's pretty crazy.
Yeah, especially when you put, let's just put Dow Jones index, Australia index, Euro index, UK index, putting all of those index in the same chart, you will see that they goes exactly the same.
Like the same as the trend.
Yes, because of the macro economy. Yeah.
Okay, I got it. All right, so just finalizing now the Fed expecting 25 as well.
Yeah.
So we have the same view on that. I would look, for the next month, I think I'm going to be like FOMC now. I need more data.
Yes. So always. They have said that for I think 1.5 years.
Yeah. There's no sufficient data, guys, unfortunately. Yeah. But so I think we would keep looking for data to come in, and then we would have something else. Now, one more question. So third one is already gone. So one or two? One. How would your parents describe what you do? My mom, I don't know if my mom would know. Anyways.
Wow. Because my parents is not has no financial background. They sometimes don't understand what I'm talking. They will try to understand.
Exactly.
But they're of course they are proud of us. I think. They are thinking we are doing some clever work. Should be. Yeah, they are thinking we are doing some clever work, but sometimes it is hard work to do. It's not something about clever or not. It's about hard working and understanding the world. But parents don't understand. No. But they're still proud of us.
It is. I think I was talking to my mom, and then. It was a funny talk actually. I was like, if some of your friends, right, ask you what your son do, what would you say? Like, oh, my son do medicine, because it's easy, right? Oh, my son is a doctor. My son is an accountant. My son is this or that. What would you say, Mum? And she was like, he has 3 screens and he looked to charts all day. That's pretty much what I do.
Yes, that's I think what my parents talk about me.
Pretty much it. That's pretty much it. Like, there's no sense for dip more into it. And to be honest, it's pretty boring when you're talking to someone. They're always trying to understand what you do, but you're trying to explain them what you do, but they think, no, that's not what you do. I want to know what you do. Yeah, but this is what I do. Yeah, people, it's very new trading, to be honest.
Yeah, people won't understand why you spend so much time to just watching on the chart. No.
Yeah, and trying to understand.
They can't feel your
emotion.
Yes, you're interested in it. They can't understand.
No, they can't. And a lot of people judge you for that. But anyways, that's not the talk for today. All right, guys, we are 35 minutes into the podcast now. And today is going to be a short one. We came here only to talk about the FOMC, the ECB. And, you know, we like what we do, so it ended up talking about everything. So just a, very shrinking process at the moment. So we are waiting for 25 basis point on ECB. We are waiting for 25 basis point as well on FOMC, the Federal Reserve from US. And these may be triggering some good trades for us next week.
If it is out of expectation,
if it's out of expectation, yes.
If it is in expectation, there will be
nothing happening. Yeah, that's pretty much what is basically happening past interest rates at the moment.
Yes.
But anyways, all right, guys. Anything else to say?
Nothing. I think we covered a lot of things today. Yeah.
I think it was a pretty good one. So again, subscribe to the channel. If you have a trader, a friend that trades, or friends that are interested on trading, just share it. This is free knowledge, guys. And yeah, see you in the next podcast. See you guys. Bye bye.